Welcome to TradeTheMBI.com. This is John. This report is for the 27th, and while the continuation of the move, we're just getting back to where it was because this was a to-do-nothing dip that gets bought back up. But it generates plenty of fear to keep people from jumping back in and filling in all their little stops along the way. And it worked beautifully, and here we are back making the move. We had a couple little positive extremes that we looked at that were right here. Filled those back in on the most recent dip before continuing. So we talked about this before. It was going to come down a little. We thought there might be a little more dip into this, but it was enough to fill the positive extreme, which is all that was really necessary. And continuing away. Is it thrilling? No, but you had a pretty consistent short-term buyers as well as mid-term buyers above your long-term buyers, even though we've been seeing an increase in the number of shorts now activating to their full amount right here after this big move. And we would expect that you can get at least a third to a half fill back in that. It's barely dipped down, so it's still pretty strong. The interesting thing about these kinds of dip in returns is most people are like, oh my goodness, it's moved so far, it must be done. It's like, well, no, it was all the way up here in the 28 plus range. So can easily go back there. And sometimes I think the focus on the actual price number becomes too big a factor for people as opposed to just following the readings. If you really ignore what the number is, then you can get a better idea of really where things are going, because I think that sometimes the numeric becomes a little too excessive. Now, here's a big difference. You can see that, oops, clicked that one too many times. The NASDAQ, all the way back up at the highs. And if you look at the relationship of the ES, if we flip back to it real quick, we're down here. So NASDAQ is all the way up at its peak, and the S&P is behind. And it's very visually noticeable. So you're going to be breaking into new as NASDAQ highs at the time that the S&P is not quite there. So one of the two is going to have to mean revert back to it, and that's going to be easy enough to see in our indicator readings at the time, which means that pullback for the NASDAQ will be more severe than it will be for the ES when it takes place, which provides opportunities, the way I like to look at that. And again, the frustration for the ECB and the euro rising, and this is certainly something that the U.S. prefers, and I know it's a frustration for them because they had their deal with Obama and them back in Yellen's days that it was going to maintain itself between that 115, 120 range, and this is significantly outside of it, which is good for the U.S. businesses. And TLT, again, this little bounce, no real reason for it. We should still be heading lower. I think there's just some question as to whether or not the Fed is going to react in the same time frame that other people are thinking in. My proposition has been that they're going to go slower on raising rates than people expect, and that's going to generate a little bit more inflation, which is also going to spur growth. That doesn't mean the market isn't going to get ahead of it, which it usually does, and you may see other rates rising before the Fed actually does anything, and we'll see, because that will be very favorable for the administration going into the midterms. So that's certainly a factor, and something it'll be interesting because it's going to let us know if there's a real tie-in between Trump's policies and the Fed policies with the new chairman. So that's something I think that a lot of people are really looking to see, if there is that coordination or if there's a complete separation. And for looking at oil, and so look at this is what we talked about. We're right back up where we were, because it looks like with the growth demand issues are still in place, and there's a finite limited amount of refinery capability that is always going to have an impact on supply issues, and growth in oil as well as in actual distillates is going to be an interesting one, because I think that you're going to get that bottleneck, and that will be the capacity of growth. That will be the marker, and so I think that's the real number to be looking for. What is the maximum, and is it able to be ramped up? So that's your growth capacity limit for the economy. And gold, again, we expect it to start continuing to make a rise because there's just no way around inflation, devaluation of the fiat currencies. Is built into the equation, and those that don't recognize it now, I mean, we've talked about it for some time since we had that significant dip in gold, and it's been a slow, steady one. Nothing dramatic. Keeping it easy. The 5K chart for the ES was quite fun. We started off with that early morning rise. Didn't get a whole lot of rejection until we ended up with the early warning sign right up here. We didn't even get a cross below until, well, this was the earliest sign right there. And then when the cyan moves above green, is your first precursor. If you're still above the ABMs, you're doing fine. But once that dip below, you had it right about here, and you're looking for your 50%, and boom, right below the 50%. It filled in most of the positive extremes, not all of them though. It was going right back to about here, so it was short of like one of them, but again, that was at a key point, 50%, right when you're getting the dip of the orange and breaking into a new zone. It's always the most powerful when you see the red DOC here moving into a new zone up above from below the negative 13. It just tends to have the most oomph, and then boom, we just carried through from there. And despite any of the moves, every time the cyan did pop back above, you had full resets of your steel, and not even barely a break before it turned right back around. So they correctly called all the little dips, but it was a measure of how far that dip was going to go. In this particular case, when you're in this kind of a rise, so as you end towards the day, you've always got short squeeze power, which usually causes you to end towards the highs. That's not to say that it can't break down, but in all of these, the steel reset was all pretty strong stuff as far as an up day goes, and you can see that's continuing right now. It's back to even. So that's where things are at this particular time. It was fun also to watch. We were looking at Bitcoin here too, because it had a breakdown, and then it was announced that Goldman Sachs was getting into Coinbase and that's going to propel this back up, because that's an indication now that you have your first major market player who's getting involved in this, and that should be the catalyst to secure Bitcoin into the future. A lot of people think that it's guaranteed, but it's not a guarantee for a lot of these cryptocurrencies. You really have to have support that's going to move it into a class that will allow it to be readily utilized in a global market where people are willing to exchange for it, as opposed to just a store of value. So clearly that's had an impact. It is overbought, so it looks like we're going to see some retraces into this, but that's not a surprise. There's been a significant decline from this. Still 50% of what its highs were. But that's the way these things go. It's always a rotation. As always, though, I will put up any charts that are relevant and sending out renewal notifications, so be on the lookout for that. As always, trade well, and we'll talk again later.